What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I just showed you some dividend stocks, the high yielders that I'm going to be buying, and I'm going to show you the dividend ETFs that I'm going to be implementing and adding. Now I showed you 5 of them, but I want to show you what's inside of this one pie. And I'm very excited to reveal that to you. It's a bunch of pieces together. Again, if you watch my previous video, there's 5 dividend ETFs that I'm going to be focusing on. But there's some other ones I'm going to be adding to this. And I'm going to explain to you what I'm going to do with this strategy. But I think this is a long-term strategy, and it should, in theory, work pretty well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these dividend ETFs right now. So first off, I made a total of $3,947.82 in passive income. That's with my dividend portfolio. And again, last month I made $7,069.12. Is that guaranteed every month? No. So that's a reason why I'm also adding dividend stocks to the arsenal. And I just didn't have enough firepower to start supplementing my dividend portfolio and buying these dividend growers. Because I do want to have dividend growers. I don't just want to have ETFs with an expense ratio. I want to have actual stocks and REITs to build my dividend portfolio as well. So I like that quarterly distribution, but I also like the dividend growth. So some of these you're not going to get dividend growth on, but I'm going to show you my section so far and what I have and why I like this. So I'm not going to go over GPIQ, TADQ, QDBO, OVL, KQQQ. Check that out in my previous video. I'll put that in the comment section of this video. But if you're interested in understanding them, check that out. And I would encourage you to check that out because, you know, it generates more traffic for you, for me. So please click that too if you haven't seen that one. So a lot of people have enjoyed it. I'm starting to get a lot of hits. A lot of people have subscribed watching that section. But I want to show you what I'm doing, and I'm going to explain to you why. So let's check this out. So I have this section that I call Distribution is King. If you want me to post the link, actually I'll just do it in the comment section as well, implementing this in my dividend investing strategy. So what I plan on doing is not just keeping this. Okay, it's not like I'm just going to get rid of it and then start focusing on the other stuff. This is always going to be there. So if I add a new section, I'm going to move our holdings to the other side, then re-add them here so that I can get distribution on this. So this is almost like a continuous distribution. So I have 18 slices. I have 8% in OVL, 4% CHPY, 6% SOXY. Now, overlay, I may add the other ones as well. I really like them. CEPI will add for the weekly pay. XQQI will add some firepower. AIPI. I have EGGY. I have FEPI. And then GPTY to reinvest with the YieldMax. EGGY, XBCI, SPI, and TADQ. So some of these that I added in there, I'm really glad that I did because, for example, EGGY is a nice high yielder sitting at 33.67. This one has really given me some really good distribution, and I'll show you the trends real quick and a little bit about EGGY. So first, it does have a high expense ratio of 0.95% and a distribution of 33.11%. This one is built for investors seeking high monthly income without sacrificing long-term growth potential. So it's actively managed and strategically focused. It targets average annual yield of 25% 8% through a selective cover call strategy applied to a concentrated portfolio of 10 to 25 NestYield's highest conviction holdings. So let's go over these holdings. Now again, we have a nice distribution of 115 that has increased over time. So it is growing its distribution. That's one thing that I really like about this ETF. Its top 10 holdings right now are Seagate, Bloom Energy, Lumentum Holdings, Veritiv Holdings, AMD, SK Hynix, Coherent Corp, Alphabet, Eli Lilly, Credo Technology Group Holding. So those are some of their top holdings. You have a distribution and you have some very good holdings and you have that distribution per month that is still in my portfolio for a reason. This is why I'm going to continue to buy it. A dollar distribution is very nice. Now another one that I really like and I'm going to continue to add is the Roundhill S&P 500 Target 20 Managed Distribution ETF. And I'm going to jump to that. This one is absolutely going to be in my arsenal. So the Roundhill S&P 500 Target Managed 20 Distribution ETF, it's designed to pay monthly return of capital distributions to shareholders at an annualized rate of 20% while providing exposure to the S&P 500. So that's one thing that's very interesting. You have to be very careful, obviously, because it's a higher yield, but 20.68 with a monthly distribution is very attractive. The other thing is it seeks to offer monthly distribution payments, which I already said, to shareholders at a rate of 20%. XPay seeks to target 100% return of capital distributions. Its secondary investment objective is to provide exposure to the return of an index composed of U.S. listed large cap equity securities. Now again, here are its holdings, so you don't see actual shares of companies. So you have to be aware of that with contracts. Okay. So its distribution has decreased a little bit, but the S&P 500 hasn't jumped up so much. So that's one thing I'm going to look at and study the trends is the distribution. Again, it started off at 97 cents to 95 cents to 89 cents. Now the NAV isn't the best right now, and you see the distributions from the start at 95 cents to 89. So I have to be very close at watching that closely. So I wanted to just give an example of those two. And now you have ones that have actual holdings with weekly pay, such as the Rexfane and Innovation Equity Premium Income ETF, FEPI, which I really like, that has weekly distribution. It is a high yielder and it distributes weekly, which is nice. So it owns big tech, it writes cover calls, and it gives you an enhanced income potential. So the sector is focused on technology. So you notice it was a monthly distribution, and now it is a weekly distribution. So we have to be aware of the trends of the income as well and the NAV. So these are some that need to keep a very close eye on with the NAV, but the distributions are pretty nice. When the stock market hopefully gets better, hopefully this rebounds. And again, it has some really good holdings like Apple, Microsoft, Amazon. Netflix has taken a little bit of a hit. I'm wondering if they'll kick them out. Meta Platforms, Palantir, Alphabet, Tesla, Nvidia, and Oracle. So Netflix is the really big surprising one. That one is really interesting. I'm wondering if they will boot it out because it rebalances and reconstructs. So that might be a change for the portfolio to help with the NAV. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I was very excited to post that video for you to reveal to you all my ETFs that I'm going to be buying. I know I was very specific towards 5 of them. and really praise them. And you see I have a higher percentage. Just go back to the beginning of the video. I have a higher percentage of distribution going into those because I feel very confident in them. Some of these you have to be really careful with. The weekly payers, absolutely. Sector gets hit, you're in trouble. So I like balance. I like stability. And I like a good NAV to be stable. So that's one thing to keep an eye on. So you guys take care and have a great Monday. And I'll try to squeeze in one on Tuesday, but I'm going to start doing a lot of shorts as well. So you guys take care and have a great Monday morning, and hopefully the rest of your day and week is fantastic.